So the Denver Post just ran an article saying that high interest rates have the Denver real estate market in a cage. People were coming up and asking me, Lennon, is it true? Is the Denver real estate market really in trouble? Well, if we're going to answer that, I think it's really important to look at a handful of points. Now, the first thing I want to talk about is home sales. True, home sales are down right now and buyers are being much more cautious. There's a lot more price reductions and there's a lot of inventory on the market compared to how many buyers are out there right now. Next thing we need to keep in mind, this is not a crash. This is not like 2008. It's not that there's a flood of foreclosures going on in the market right now. It's just that there is high mortgage rates, and that is making these buyers very cautious. You see, there's millions of homeowners who have interest rates on their loans between 2 and 4%. And that would mean if they sold today and went and bought a new home, now they're looking at interest rates between 6 and 7%. And that makes them hesitant to want to sell their home and buy another home. So while there's quite a bit of inventory, it means there's fewer buyers and fewer homes being sold, and that equals fewer transactions overall in the market currently. What I'm seeing right now is homes that are priced aggressively towards the lower end of the comps are selling. There are buyers out there who are looking to move. There are buyers who have to move via work and many other things. And these buyers are out looking, they're just getting more deals, they have more leverage, and that's really important to keep in mind if you are buying or selling a home right now. There's advantages to both. While you might be moving up in an interest rate, you're also getting a home at a cheaper price than you may have a handful of years ago. So, one of the things that's very important to keep in mind is that this market is by no means crashing. I would say it's more normalizing than anything. Handful of years ago, when we had super low interest rates, the market kind of went a little haywire. We had not a lot of inventory, and because of the low interest rates, the market was flooded with buyers. What does that mean? That means we had a lot of competition for each and every house. Homes were being sold for 50, 60, 100 grand over asking price, and that put these buyers into negative equity right away. That's a very imbalanced market and created hyperinflation. We're now seeing a bit more of a normalized market. Home prices are not drastically decreasing, only by a couple percent. So, buyers, while you may be getting into a higher mortgage rate, you are getting your homes at a lower price and more equity in the future, and that's a great thing. So, it kind of works on both ends. And I want you to tell me, is the market crashing or are we just seeing a normalizing in the market right now? Comment down below and let me know what you think. Have a great day.